Ramesh Damani helping us wade through all of that. Market veteran, Mr. Damani, always a pleasure to speak with you. Very good morning and very interesting morning. What are you making of all of the statements and the developments over the last 48 hours?
Yeah, good morning and thank you for having me on your show. I'm generally having a more optimistic view of financial markets given what happened over the weekend. I think another way to look about this conflict between Israel, America, and Iran is to look at bark versus bite. And clearly, I think events as they've unfolded have proved that Israel and America have bark and bite, whereas Iran has only bark. So in my sense is that it was a very monumental decision that President Trump made over the weekend, but it has completely changed the contours of the Middle East. And I think investors can look ahead to an area of peace, prosperity, FDI flows in the Middle East.
Wow.
So a lot source of the tension for the last 40 years is now dissipated.
That's an astonishing counter view, Mr. Damani. So you think that Trump has thought about it and is going to get away with it, and it's a calculated move to send in those B-2s and bomb those 3 sites?
I think so. Let's look at the evidence. I mean, forget what my view is. Let's look at the evidence. Within 12 hours of the fight starting, Israel had decapitated the entire leadership of Tehran, including the nuclear scientists and the generals. Within 48 hours, they had complete control over the airspace of Iran, complete control of the airspace of Iran. In fact, they sent 200 planes on the first day and they came back unharmed. The U.S. sent its B-32 bombers. They came back unharmed. So my sense is Iran has a very limited capacity to retaliate. There might be a stray terrorist incident, a stray cybersecurity incident. We can't rule that out. But I would seriously doubt that. I think they're basically, as I put it in my earlier statement, they are more bark than bite. And I think the world will recognize that. I think over time, may I just point you out to what is the most relevant index to look at this time? It is the Tel Aviv index, the TA-125, which made a new high on Saturday. It is up 5%. Last week it's up almost 40%, outperforming the Dow over the last 2 years since the Hamas attack happened on October 7th. So that market is telling you that there's a prospects of peace, prosperity that is within sight in the Middle East.
Ramesh, good morning. This is heartening to hear. And kind of the risk assets are showing that oil may have started off 5%, but just about couple of percentage points higher. My question is really that if Iran were to go ahead and do some tinkering at the Strait of Hormuz, and one doesn't know how short-lived it will be, would it just be a flash in the pan move, or could that be some deterrent for risk assets because oil prices may spike up, so on and so forth?
There would be knee-jerk reactions, but I think basically Iran is out of options. I mean, you really, there's an old saying, Neeraj, in the Hindi language, ki jiski lathi uska bhais, which is a crude translation is that might is right. And I think Trump is playing that out with Israel in the Middle East, that we have the power, we have the bombs, we can knock you out, we can kill whoever we want. I think Iran is just out of options. I think for 40 years they've called a bluff game with the U.S. administration. I think finally someone has called their bluff. So I think while they might try this or that, they basically don't have many options that are good.
Got it. Okay. Well, in some sense, Mr. Damani, this for risk assets worldwide, do you reckon that they would view this as the beginning of the end of the conflict, and therefore not just for Middle East, which you alluded to, which actually get a new era of fund flows, etc., but for risk assets worldwide, this could be the start of something more predictable and constructive?
I think, yes, the short answer, there will be a honeymoon period. So, yes, I think it will be good for asset classes across the world out there. But, market will now, fortunately, unfortunately, have more time to focus on U.S. domestic politics, where the threat of Trump's tariffs, threat of inflation, threat of deficits are not going to go away. And the market will start reacting to that more sharply. It has been quite focused on the conflict in the Middle East and the going-ons there and so forth. So over the longer-term horizon, the challenges that pervade in the U.S. market will still remain. But I think in the short run, the market, I think sooner rather than later will join the celebration. I believe that the all-time high of the Sensex was around 86,000 made in September, October. I think there's a good shot that this quarter will challenge that high.
Just one last point, Mr. Damani, and for those who will see some weakness today and markets are likely to react at open, any kind of conflict of this sort of uncertainty, would it be an opportunity for those who have a longer point view or longer term view on India to come in and buy and shore up positions?
I think so. I mean, to me, it seems that the fears are a bit unfounded, and this dip in the market will present us a buying opportunity that we should take advantage of. The market seems ready to, I mean, the 1,000-point rally that we had on Friday suggests that the market is a powder keg ready to go off, and I wouldn't be on the short side of the street at this point.
Hey, that's, wise words there. I wouldn't be on the short side of the street right now, says market veteran Ramesh Damani.